Hey everybody, it's Seth, Paul, and Mo for the Everything Money channel. We're glad you stopped in and clicked on our video. We hope that ravishing thumbnail by our producer Don got you spiced up enough to click on it, which I think it did. We're here today talking about plug power. We're revisiting this. We talked about this a month ago. There's a lot of requests for this from our Patreon, a lot of comments about it. We covered this when Paul was in Mexico, your beautiful Mexico home, about a month ago, and you were baffled at both the stock. What is that move?
Oh, I'm just doing that.
You were baffled at both the stock price, what they do, obviously the hype surrounding this. The new news. Now, do I say new news or just news?
The new news.
New news?
Because news is a
But
noun.
it is new. Okay.
And new is that an adjective?
Well, yeah. I guess you can have old news as well. But anyway, the news is
the new news.
that they are, is it new news?
You do the new news.
Thank you, Mo. The news is that they have to resubmit the restatement of their financial statements. And Mo said, well, this is better than committing fraud, is at least saying maybe we've screwed up. But
So what was the big restatement? Like what was the actual restatement?
well, it hasn't quite come out.
Really?
No, I think
So by the
they're-
time this video come out, it probably will have come
perhaps.
out. Okay.
I think they're working through
So
the
for all you
process.
people out there are going to say, you don't do your due diligence, I'm going to say, all right, people, pump the brakes.
What was that? What was that?
You don't do the due diligence.
Is that how they talk and move when they're saying this? There are a ton of comments, Paul. The last time you did this video about Plug, you were not impressed with this company, and in your opinion, it wasn't a void. Some of the comments started roasting you about like, we'll look back on this in a we'll look back on this in a year, how wrong you are. You'll
Maybe.
look so silly, yada, yada, yada.
Maybe.
Since then, Paul, since January 26th,
Well, you know what I'm going to say about this.
let me pump the brakes. Okay. Since January 26th, this price
Half.
half? Yeah, it hit a little over $75 6 weeks ago. Oh, almost, yeah.
No, 8 weeks ago.
8 weeks ago.
9 weeks
And
ago.
now look at it. The leader in hydrogen fuel cells for forklifts. What is the stock price now? What's so funny?
The leader in hydrogen fuel cells for forklifts.
Well, hold on a minute
We went
now.
from niche
Just-
to super niche to ultra super niche to 4 people in the world are going to buy this.
No, that's not true. So they're trying to get in. They're trying to get these fuel cells into a bunch of other things.
I
Paul.
know,
So
I'm
this is just the
teasing
beginning,
people, but
of
it's
course.
just funny to hear that say. It's like the leader in hydrogen fuel cells in forklifts in countries that have second letters starting with Z. Oh, okay, cool. So our market is
There's not many of those countries around. So yeah, former price. I guess people really believe in this company, and
so that's the thing. I want to interrupt. Do they believe in the company, or do they believe in what they've seen the stock price do?
Do they believe in everybody flocking to this company because everybody's flocking to
so
it?
this is the point of the video. We get tons, even the people who join our Patreon who are looking to level up. They still say, my history of investing is sort of like this. I decided I want to get into it. I went on YouTube and watched all the hype people that are not us pumping up this stock with rocket emojis that this was going to the moon. And since then, they have probably lost a lot of money, Paul. If they invested and listened to our comrades and other channels, they're probably not feeling too confident in their investing skills.
Skills.
And all too often, you see changes in this stock price going from 75 to now 39 bucks. And you see, oh, you know what, Paul, the analysts have now set their new price targets, but they never say why they set their new their targets, their price targets, and what's behind them. So I'd love to get your thoughts again on Plug. Now that it's shifted so drastically, I'd love to get your thoughts on this company.
So I'm just going to skip. We're not going to do all the 8 pillars. I'm just going to skip to our wonderful software, which you can get by joining our Patreon for only $17 a month. Spots are limited. More at the end of the video. 8 pillars. The only growth is revenue growth, the only check is revenue growth and assets over current assets over current liabilities. It's a $14 billion market cap with $307 million in revenue.
Did you say? Okay, so that revenue, what year is that from? Is this from 2020 or what's the story?
It's saying this is the data feed I get from our data provider, and it says last 12 months, $307 million. Is that not accurate?
Well, it's surprising, Paul, because they're
Nope, it's accurate with Y charts too.
okay, great. Their target revenue for 2024 is 1.7 billion, Paul. They're really looking up in the world.
For 2024,
That's
we
right.
have to wait 3 more years.
Yeah.
3 more years for this company to still be selling at 8 times revenue, which is still pretty high. Price to sales ratio, which is the market cap divided by the revenue, 47. Do me a favor, guys. Everybody go out there and look at other price to sales ratios. I'm not even going to do it for you. Just go out there and do it and tell me how 47 looks.
Tell me, because I have no idea.
Let's put it this way. Based on our company that we have in-house, at this kind of revenue, I'm a billionaire. So welcome.
Congratulations.
Thank you very much.
Check, please.
Thank you very much. Is that clapping? I don't hear anything.
I have new sound effects for you. So
Is it cheering and clapping?
You'll see them. No, I hit the wrong button. I gotta act fast here, Paul. So
Probably hit crickets.
I hit the wrong button.
I
So
was
guys,
looking for crickets, but go ahead, Paul.
well, the other aspect we have is, let's go look at this chart. This chart over the last 5 years. Yeah, it's pretty low here. People are like, oh, look, $1.78. And they see this hype. But let's go back. I don't have the data yet. I'm still buying the data for all-time max. This company back in 2000 was $1,500 a share. $1,500 a share back in 2000. Everybody believes the hype. If hype is so awesome, let me ask you this question. Since the beginning of the year, since January 26th, what's the stock market done?
Continues to go up.
Even or up a little bit?
Yeah, maybe up a little bit.
This is down in half. So if hype wins all the time, if I don't get it because it's hype, because everybody thinks this company's going to the moon, then why should this ever happen? The problem with hype, guys, is hype is only good in the short run. And by the way, this will probably jump back up a little bit. Nothing ever goes straight down. Nothing ever really goes like this until, it's still, even in a crash, the crash goes like this. Even crashes go like that, right? Up markets go like this, like that. So you gotta remember, if you have this company and you just lost half your value, what are you thinking right now? Oh, at least the company's making money. Oh, but it's not. Let me ask you this question. Let's say you own your own business. Let's say you own your own business, and that business was a garage shop. And every year, you made $100,000 a year. Every year, year in, year out, you made $100,000 a year. Some years, the market loves garage shops, and they're willing to pay you five times that profit, so your business is worth $500,000. Other years, they don't like it so much. They only want to pay you 3 times. And why is that? Just like everything in life, multiples change based on people's emotions. Guess what? You might sit there and go, oh my God, I just lost 40% of my net worth. But guess what? You're still making $100K a year. So what do you care? You're like, hey, people's emotions are gonna be up and down, but over time, my company will probably be worth about $400,000, 4 times profit. That's what you're looking at. I look at the stock market the exact same way. If the company makes me money year in and year out, you might be like, well, Paul, I don't make that money. Yes, you do. As a shareholder of the company, you are owning a piece of the revenue and profit every year. But what we have here is in this market, in general, and it took me a long time to understand this as well. I thought to myself, no, I'm buying a ticker symbol. No, you are buying a piece of a business. You have to value it like you're buying the whole business, even though you're buying a piece of it. You're looking at yourself buying a piece of this $100,000, right? That's what you're looking at. The market will determine, based on its emotions, what they're gonna pay you for that. It's up to you to sit there and say, the problem is, if your company is losing $100,000 a year, this matters a lot more. When your company's making $100,000 a year, this matters a lot less. Because at the end of the day, you're like, okay, well, the market's gonna do what it's gonna do, but I'm still gonna make $100,000 a year in, year out. That's the way you need to look at companies. A company like Plug is losing money hand over fist. So the only thing you have to rely on, the only thing you can make money on right now is this. And the hype is all that matters to you, and that's why you have people like Kathy Wood coming out and saying Tesla will be a $3,000 share company. Because the only way she makes money is that happening, right? Because there's no other way to make money. It's not like Intel and Microsoft and Google who spit off tons and tons of cash and they can pay out to investors at some point because they can't reinvest the capital at a certain rate of return. But here on these hype companies, all you have is the market value. So the second somebody goes, you know what, we're only gonna pay you 1 time. If you're a stock market driven person just by the market value, you are scared crapless here, right? But if you're a value investor who understands cash flow over the long haul will win, you're like, okay, cool. The company's still making money, it's still generating cash flow, it's still building its balance sheet, it's still making it better and better and better, and eventually the market will realize that. That is what we're trying to teach here. That's what we're trying to all understand together. Does it take a reframing of your mind? Absolutely. It took that from me. It took years for me to understand that, but that's why we're here doing this. So when you buy these companies like Plug who have major hype and they fall in half, of course you're going to be scared because the only way you make money is the stock going up. For me though, if I buy a company that's selling for 10 times free cash flow and all of a sudden the market says, no, it's worth 8 times free cash flow, the price drops 20%, I'm like, okay, cool. Because it's still making me a lot of money on my return. It's still making me 10% on my invested capital. And I'm happy with that, or whatever the number ends up being. And that's what we're trying to understand here, is that you're buying a piece of a company and not just a ticker symbol. You're not just buying a baseball card or a Magic the Gathering card. You're buying a piece of a business that is generating cash, it's building its bank account, it's paying down its debt, it's making its balance sheet a lot better.
So that's really the value investing side of this. What if someone wanted to trade this?
That's totally different. If you want to trade the stock, you don't even care about the fundamentals.
And if you're in the Bid and Ask Nation, the middle tier of our Patreon, you'll be interacting with our dear, the Egyptian dreamboat. That's what I've been calling you, Mo, because you're so handsome and muscular.
Well, there's got to be some sort of Nile River kind of thing we can talk about here. What would we call it?
The Jewel of the Nile.
The jewel.
Mo, talk about trading Plug. You pulled up your data here, and you were kind of baffled, or shocked. What's going on over there?
So this is a year chart, and you can just see the climb that it's had. My recommendation, if you're going to play something like this, if you're going to go long term on it, use stops. This is probably a very good chart to day trade with because the volatility is always there. But I just want to point out a couple things. So right here we have a gap up, and right here we had a gap up. And gap ups are in the morning, overnight. Stock price jumps on you the next morning, probably from some news, and Plug is very news driven and whatnot. I always say to the guys in the Bid and Ask Nation, gap ups always fill. And you can see it takes time, but over time, these gaps have filled. This was your gap here, price dropped through it. This was your gap here, price dropped through it. So gaps always fill. Just be very aware that when prices gap up on you, there's a high likelihood that they're going to fill, especially with a hype stock that doesn't, you saw the financials from it. Eventually, big investors are going to notice that this isn't doing anything. Let's get to what you want to do with this stock today. So we have obviously been coming down for the last month or so. If you want to do something with it, you're oversold. So this is one of those good tracker share stocks if you want to do something with it. To me, there's better options out there. This is something that I don't trade hype. I don't trade hype even when it comes to charts. I like companies that are more stable and that are not going to jump up and down overnight on me multiple times a week if possible. So that's it for Plug from this side.
Paul, I would imagine if their accounting errors come out less than lovely, there might even be
Let me ask you this question, Seth.
Go ahead.
If you're a company whose stock price is skyrocketing, not based on fundamentals, do you have more or less incentive to kind of be a little liberal with the accounting rules?
I wouldn't even know
aggressive, I should say.
I wouldn't even know what you mean, but are you saying they might obviously? If they're holding their own shares, then they can obviously doctor their books in a certain way, or maybe that's too strong.
Maybe it's too strong, but remember, guys, these hype companies tend to have a lot of accounting issues because they need to keep the investors happy, and the only way to make the investors happy is to report better news, so the stock price keeps going up. Mm-hmm. It's just basically a version of a Ponzi scheme in the sense of we're going to tell people one thing to get other people to make a lot of money. They sell their shares, other people make. It's kind of like everybody's making money off everybody, as opposed to now. I don't know what the actual issues are here. I don't. According to Seth, they haven't come out yet.
No.
And you people out there might be saying, "Well, Paul, didn't you do more research?" No, I don't need to do more research. I just need to know from a 500-foot view, how does this look? And when I look at my 8 pillars right here, and I look at this and I go, they don't even have earnings. I just look at it saying, I'm going to avoid this. Does that mean I could miss out on the next big company? Absolutely. But some of the worst things that can happen is making a lot of money on a company like this, because then you think every company that looks like this is going to be the hype, and eventually you will lose a lot of money. Every hype ends up losing lots of money. Every single one. At some point. Now, could it recover? The example I always give is Amazon. Amazon went from 107, crashed to 6, and now is at 3,500. Mm-hmm. You might sit there and say, see, Paul, you were wrong. I will bet my entire life you would have never held on to it down to here. I will bet everything, because the person who wants to see it go to here and ride it just because of that is this person's going to sell on the way down to here. If you think you're different, then you shouldn't be watching YouTube. You should be a billionaire sitting on Wall Street with tens of billions of dollars in money under management. You are not going to hang on to the ride when it goes down to 6.
And also, Amazon is one small example out of the many, many, many that did not do that.
Correct. In fact, I had a patron do research for me. If you invested at every single hype stock in 2000 and ridden it all the way from beginning to end, never sold a single share, you would have only doubled your money over the last 20 years. Doubled your money over 20 years at 3% return. And that doubling happened because of 3 companies, Microsoft, Apple, and Amazon.
Yep.
That's it. All that doubling came from 3 companies out of like 100. So if you think you're going to be some person who's going to say, look, I was right on Amazon, great. You were wrong on everything else. And the only reason you made money, it took Amazon going from 6 to 3,500 for you to even, from 107 to 6 to 3,500 for you for even to double your money. So that's the point, guys. Hype stops working because the same hype that you're going to ride on the way up is the reason why you're going to sell on the way down. It's the same mentality.
But so I always question you, Paul, when you say this, because a dummy like me would say, well, can't money be made on the way up, and I can catch it right at the right spot?
Yes, momentum investing. We're going to talk about momentum investing. The Patreons are going to be able to learn about momentum investing, but that has nothing to do with fundamentals. The second you start saying, well, because like Kathy Wood talks about the potential of once they get into this market, and that's fundamentals. You're done with momentum.
I was just going to say the same thing here. It says, obviously they're poised to have a stronger next 20 years than past 20 with fuel cells. It says they get into power offices, warehouse, data centers.
Great. Let me ask you this question. How many car companies and airline companies have been started and failed in the last 100 years? But how big is the market now versus 100 years ago for
way
car?
bigger.
And hundreds of car companies have come and gone. Hundreds and hundreds of airlines have come and gone. Just because they're in a booming market doesn't mean they're going to survive.
So in the end, we really just want you to be careful out there. I guess, like I said, I was getting some feedback that people, when they first jump into this, they may not know these pitfalls. They listen to the people who are very excited about getting their oven mitts ready for these hot stocks. And some of them are losing a lot of money, and we're hearing the stories afterwards. So they're actually, Paul, they're coming to us after they lose their can.
That's the most common comment. One of the most common comments we get is from our patrons is, when I saw your video, it just made sense to me. Like, okay, this is what I was missing. And I'm not saying, and guess what, guys? The great news about our patrons is they're going to learn. Let's go here. This is our website. It's coming out April 15th. They're going to have 8 pillars: real estate calculator, momentum trading, chart trading, loan calculator, with more to come. We're going to have data. We're becoming awesome in terms of becoming a data provider. Our goal was to get 700 users by the end of 2021. We're already at 1,628 users already and growing by 20 or 30 a day. Guys, this is awesome. And the best part is people don't even have the software yet. Our Discord our patrons are all in Discord talking to each other about investing every single day.
Yep.
The conversations we have are great. And this is the example I always bring. This used to be $8, went to 14, now it's 17. Look at all the things you get. 8 pillars, 10 years of financial stock. This is per month. Discord community. Our biggest competitors, 200 a month, 200 a month, 35 a month. These are their basic levels. These are the lowest levels. This is unbelievable value here. And I'm just looking at it going, how do I build this even better? I just had a phone call today with our data provider. We're literally probably going to spend 10 times more on data in the next year and a half than we do right now. 10 times more. That's insane.
Yeah. I mean, if you're watching at home, in contrast to some YouTubers who I always say they're just sitting in their spare bedroom trying to give you stock tips, this show is absolutely for real. Paul is spending hundreds of thousands of dollars to bring you this content, to bring you this Patreon page, and to bring you this data. And so that's our take. The link for the Patreon's in the description below. As always, you can join our tiers. They do go up in pricing as they fill.
They go up in price, and this 17 will not be right. April 15th, this 17 is going well over $20 a month. But you'll be locked in at 17 if you lock it in. Just like the people who locked in at 8 are now locked in, right? So I look at this going, guys, if you're serious about investing, and serious about learning, come join. This will be a group that has a lot of, we're going to go up to 50,000, 100,000. You know what Tim said to me? He goes, Paul, I bet you in 10 years you have 1 million subscribers.
Yeah.
And I look at saying,
you mean in
okay,
Patreon?
What was that?
In Patreon? Patreon?
Or through the website or whatever.
Oh,
the whole
yeah,
point is, this is going up to, this 17 is going to be 49 plus at some point in the next couple of years. So the question is, do you want it for 17 or 49? That's the question.
This is our take on Plug. Again, in our opinion, we're just avoiding at the moment. We're going to let this company settle in, make some money for some years, and then we'll take our value investing
I hope it
approach.
makes money because right now it's not looking good.
Yeah. Make sure you guys fondle the thumbs up. As always, Paul, you know, you like to be tickled, and we want to tickle that thumbs up. I just got the new. Thanks for watching, guys. We appreciate every money.